I know. Many of you have dragged me offline. It has definitely been a while, and by a while, I mean roughly a month, 5 weeks, thereabout. But finally, I'm back. From birthdays to weddings to my birthday to getting sick. I'm not even 100, but I'm like, you know what? If I could do some other things, then I could definitely pop in here for 10 minutes to just update you all and everything. So, one, life has been lifing in this past month. My birthday came around a week ago. I couldn't even celebrate how I wanted to celebrate. On the bright side, I'm here right now, and that's all that matters. So, welcome back to the Wealth Corner. Today we're going to talk about popular ETFs for beginners. These are the ones that people actually buy, the ones that make investing simple, steady, and stress-free. So whether you're building wealth from your 9 to 5 or whether you're just trying to make smarter money moves, these ETFs are a perfect place for beginner investors. Just note that one, I'm not a financial advisor. I'm just doing this for educational purposes, for entertainment purposes. Do your due diligence, do your research, all that's on you, basically. So remember a couple episodes back we spoke about ETFs. So just to remind you, an ETF is also known as an exchange traded fund. So basically think of it as a basket of investments, stocks or bonds, whatever, all bundled into one. So instead of buying one company like Apple, you're buying a little slice of many companies all at once. This basically spreads your risk out and it makes it super beginner friendly. Plus, they trade like regular stocks, so you can buy and sell them during market hours. So why are ETFs a go-to again for beginners? Because one, they're diversified, meaning that your eggs are not all in one basket. They're also low cost. No expensive fund managers, just simple tracking. They're easy to buy right from your brokerage app. And they're transparent. You see exactly what's inside that particular ETF. Now that that's out of the way, let's talk about what everyone's been buying. So let's talk about VOO, Vanguard S&P 500 ETF. So this one is a classic. This is what people tend to buy if I go on X, if I go on Facebook, Reddit. This is one of the solid ETFs. So VOO tracks the S&P 500. So that's 500 of the biggest companies in the US. So you're talking about Apple, Microsoft, Amazon, Google, all in one, as opposed to buying one share of Apple, buying one share of Google. It's all combined. Actually a favorite for long-term investors who want simple, steady growth, like myself. The next one we have is VTI. So that is Vanguard Total Stock Market ETF. So if VOO is the top 500 companies, VTI takes it even further. Over 4,000 US companies. Now that includes big names, small names, and everything in between. If you want to invest in the entire US market in one move, VTI is your best friend. Same thing, low fees, 0.03, but even more diversified. So next we have QQQ, Invesco Nasdaq 100 ETF. Now QQQ tracks 100, not just 100, the top 100 non-financial companies on the Nasdaq. So it's tech heavy. The tech lovers, we love us some QQQ. So you'll see companies as Nvidia, Meta, Tesla in there. This ETF is for the people who believe in innovation, tech nerds, and just they love that AI related space. They think tech is the future, which it is technically. The fee is a bit higher though, 0.20% roughly, but the performance over the past decade has been phenomenal. You can be a little more volatile, higher highs, but deeper dips as well. And that's just the price we pay for being in the market. Next we have SCHD, Schwab US Dividend Equity ETF. I'm saying so much, I'm out of breath. But anyway, so let's just say you like the idea of getting paid holding an ETF. Meet SCHD. This company focuses on companies that consistently pay you dividends, and I don't know about you, but I love me some dividends. I love me dividend paying stocks too. It just does something to me differently than growth stocks. I like to feel like, I'm seeing what I'm putting in a sense. It's growth stocks, yeah, you feel good, but like dividends is like, yeah, you're giving me something for putting my money into you. So that's what SCHG, the feel of it, would give you. I also own some of that, more recently, but SCHD is a pretty strong pick. So definitely look into that. Obviously, don't just go jumping in, but consider looking into that ETF. Next, we have VT. So VT is the Vanguard World Stock ETF. VT gives you exposure to the entire world, not just the US, but Europe, Asia, Latin America. It's global. VT is perfect if you want to diversify beyond the US, but you don't want to manually pick international stocks, if you get me, right? So the expense ratio for that is 0.07, still quite affordable. It's one of the easiest ways to invest globally with just one click. So, yeah. So if you want to keep it simple and US focused, you can look into VOO or VTI. If you believe in tech and the future, tech is the future, QQQ should be considered. Could be considered. If you want that dividend income, then definitely look into SCHD. If you want to go global, look into VT. That is your one and done play. And honestly, you could combine them. VTI for US and VT for international. Basically, just do what fits your comfort level as well as your goals. What's important is to remember that you don't have to be an expert to start investing. And ETFs gives you that exposure, that diversification, and that peace of mind all in one. For me, I haven't felt much. I mean, I am who I am at the end of the day, so I'm not really moved by markets, but ETFs definitely gives me that sense of peace. When you're ready to stop watching the market from the sidelines, start with one of these ETFs and let it do its thing. So drop a comment and let me know which ETFs you're thinking of if you haven't started investing. And if you have already, just drop a comment and let me know what you're currently investing in. As always, don't forget to like, comment, subscribe. Please share this with someone who might need this or would like this information from someone like me. In the meantime, just stay consistent, stay curious, and most importantly, stay wealthy. I'll see you guys in the next episode.